Let's put the picture into context and talk about how the market shaped up in yesterday's trading session, because it was nothing short of a pretty smart day of recovery. Take a look at the index. In the fag end of the trading day, we managed to surpass that 18,800 mark with quite a bit of conviction, ending at the day's highest point, with the HDFC twins as well as Reliance Industries doing a lot of the heavy lifting. All sectors barring FMCG managed to gain, and you had FIIs as well that after 3 straight days of selling saw opposed to that, and there was an FII buying figure. Question remains, Nikunj, with the fact that the heavyweights are contributing, are we poised for a further breakout from the current levels?
I'll not undermine yesterday's price action. It came as a surprise, frankly. I mean, at 2 o'clock, the news on HDFC Bank merger date comes out, and the market just did a somersault. Let's look at the data point here. Nifty recovered 120 points from the low. The bank Nifty added about 400 points plus. After a couple of days of FI selling, we got a monster buy number. And typically when you see a large number on the FI front, and if it is prompted by a large stock like HDFC Bank and supported by HDFC Limited, it just gives you a reasonable amount of confidence. Adding to that is the global support. So today, I guess the setting on the table, even though it was, it's a surprise working day. It was supposed to be in holiday, but I guess nobody is going to be complaining because global cues are strong, FIs are back. A sleepy stock like HDFC Bank is really driving the market action. So I will not be surprised that the strength or the momentum what market rediscovered yesterday in the near term may really push large cap stocks higher. Mid and small cap stocks, we'll talk about it, but I guess I would divide the market in 2 parts, large cap stocks and mid cap stocks. Within the large cap stocks, the factors I've mentioned, I guess may just ignite some more momentum going forward. And given the fact that today also is going to be that entire expiry effect.
Yeah, we will talk about that. But just to pick up on the point that Nikunj was making, global cues also are supportive. So the stage is set for maybe a tryst with that all-time high finally today, and hopefully we will not give it up with just 2 points like we did last time. 70 points, by the way, and we should make it there. The SGX Nifty this morning is already indicating a positive start for us. The global cues, it's really the technology names which have once again aided the rally, at least on the NASDAQ, which is now, by the way, on track to close its best first half in a span of 40 years. So it's been a very great show that you've seen on global markets overnight, as you can see on your screens. And the good thing is that there's been a bit of a cool off as well coming in on crude prices. Brent has now slipped about 2% on further rate hike fears. So yes, it is the global cues which are intact, but we still don't know whether it's going to be July 1st as the date. The management has once again left the track open on when the merger date is going to be for HDFC Bank.
Rasha, July is when the merger will happen. The merger will happen in the middle of the series. You got to ask yourself, is that okay, a merger date, and why markets suddenly got excited yesterday? And there are a couple of factors here. Number one, that in a sense just, that in a sense now gives you absolute certainty, at least for institutional investors, because both HDFC Bank and HDFC Limited are dominated by institutional investors, on how they really need to make their, how really they need to downsize or really scale up their portfolio, given that there would be some compulsions which would be at play, at least for domestic institutional investors. B, since the merger will happen in middle of the series, also there would be an element of FNO there would be an element of FNO adjustment which would be at play. C, the Nifty composition will change because HDFC Bank and HDFC Limited, they both are currently part of the portfolio. So instead of 50 now, you will have 49 stocks, and 1 stock automatically will get included. And that really explains that yesterday there was excitement, at least in specific stocks, because it may happen the same stocks which moves into the Nifty may not move into the Sensex. So that's part 3. And part 4, I guess sometimes, markets, they wait for a trigger. And for HDFC Bank, the trigger really could be that the merger, even though there are no regulatory challenges, you always wait that in the last minute, could there be an PAIL, could there be an issue raised by minority shareholders? So if the merger sails through, I guess for an institutional investor, that risk, not that it was a huge risk, the risk also gets arrested. So that is the reason why market really got excited. The stock really, went up like a bazooka. And that FI figure what you have in the cash market yesterday, I think it is largely because of this news. It was not there you got any large block deals. So what it has done, this news, it has changed the mood for benchmark indices in the near term. And we've been making this point that the three sumo stocks have not participated. Yeah. Reliance, HDFC Bank, and to some degree Infosys. And HDFC Bank, thankfully, has really chipped in yesterday.
Yeah, absolutely.
Finally and thankfully.
Yeah, absolutely. And also that's left the way for further speculation on what's going to actually replace HDFC, because remember, the combined entity which will remain listed on the exchanges post the merger is going to be HDFC Bank. So who's going to replace HDFC on the Nifty? That's the big question as well. And it seems that it's going to be LTIMindtree. Remember, it's already the fifth largest IT company. HDFC is going to be stopped trading from July 13th. And Novama, the brokerage, believes that most likely the inclusion in the Nifty 50 is going to be LTIMindtree, which is going to see further inflows of about $150 to $160 million. And by the way, LTIMindtree already as a stock has seen a fair amount of climb up in the last 6 months itself. And of course, the Sensex speculation as well is open. Could be JSW Steel or any other.
You don't know that name, but all I'm saying is that suddenly the market will get excited.
Yeah. And all these inflows will happen because of all the speculation and readjustment.
Yeah, because you have ETFs which invest in the index. And in India, the ETF is not very large in terms of what the global averages are. But yeah, there would be a compulsion which really would be at play. This in a sense is not something which has happened largely because of the change in the dynamics of other companies. See, normally when the Sensex changes and the Nifty changes, they happen. It's largely because of the company loses market cap, the profitability changes, and then a company gets kicked out and a company gets voted in. Right now, it's the merger dynamics which in a sense may just which may be the reason why one stock may suddenly find its place into benchmark indices. So automatically what will happen is that the mutual funds which run Nifty and Sensex dedicated schemes, ETFs largely, or index funds as you may want to call them, they would be forced to buy these stocks because they will have to map the index. And every time when a stock makes a grand entry into the Nifty, we've seen that the adjustment and the excitement before the arrival actually is very real. It's like one of those factors when you get excited before the marriage, not on the marriage day. When the matchmaking is starting.
Was that the case for you?
I mean, in my case, it's very different. My wife was my ex-girlfriend. So
excitement through and through. Okay, moving on then. Another big talking point then that is on the market's mind and on a lot of investors' minds as well is the fact that the NSE just yesterday withdrew their notification. This is for shifting the Nifty bank expiry to Friday from Thursday. Now, do remember, it was just earlier in this month itself that they had changed the expiry for the bank futures and the FNO to Friday instead of Thursday, effective July 7. And the first expiry was scheduled on the 14th of July. So BSE has requested NSE now to consider shifting, Nikunj, of the expiry.
I'm glad they're smoking peace pipe, if you may want to use that terminology. It looked outright silly when though exchanges are fighting. The idea was that BSE wanted to regain some market share, and in order to regain some market share, they wanted to do something different. Then NSE said, okay, we will not let BSE regain market share. We will also come up with a differentiated FNO expiry. What that would have done is that it would have only added to more volatility, and it would have only added to more volatility not for the sophisticated traders or not for the sophisticated institutional investors, only for the retail folks. As it is, we know that within the options market, there is a lot of retail activity which in a sense has been a concern. So this entire fight to gain market share between the exchanges would have only led to more volatility, and Bank Nifty is a very large instrument that would have also added to more shuffle here and more shuffle there. So I think this is in the right direction. The reason why NSE is number one is because of efficiency, is because of the product, and it's because of pure technology. While BSE is trying to make a comeback, but just by coming up with something here and there and changing the FNO expiry day, I don't think you can really gain market share and sustain market share. But if I really address this entire news from NSE and BSE, what it means for our viewers, well, it clearly means that this volatility which would have got created largely because of a change in the FNO expiry day which was announced initially, I guess thankfully that will be taken care of.